Good afternoon, everybody. It's your boy Doc. It is currently 2:39 p.m. here in New York City. A nice, comfortable 72 degrees. But we're not talking about the weather. What are we talking about? We're talking about the stock market, specifically QTA. QTA stands for Quant Trading App, which when I was introduced to it by the creator and avid user Bryant, it changed the way I look at trading. But what it does is, and I say this 1,000 times, it makes good traders great and great traders more confident. How does it make you more confident? It's because, okay, well, let's start from the beginning. We're all used to trend lines and we're used to charting, technical analysis, right? No stranger to that. We have levels, we have trends, we have indicators. And I happen to have the RSI, the MACD, and the Vortex indicator up. And we get our information in our plan of attack from that, right? We can zoom out to the daily and say, okay, Tesla is in, let's go to the weekly on this. Tesla is in a huge symmetrical triangle. Get a little more. Huge symmetrical triangle for almost the entirety of its activeness, right? Since that major run up that everyone fell in love with Tesla to right now. We're coming down to a point, and we put it back on. You can see that clearly within this triangle. At the end of it, something should happen, right? It's got to make a decision one way or the other. Within the meantime, the trend is your friend until it's not. And that is one of my favorite phrases because we have to look at the information we have and expect it to respect that information until it doesn't, until it gives us a reason not to. So being within that trend, we can imagine that these two huge blue, I'm going to make them huge, these big lines are the boundaries. It could break. We're not going to expect them to hold, but we're going to respect them, right? So it's been respecting. We got to assume that it's going to be respected. If it breaks, that's a play. It's good when it breaks. If it does break that trend, that's my favorite play. When a break of a pattern is one of my favorite things I look for. You can also play within the pattern, and we have been doing that. Anyone watching this in the future will know that I've been watching Tesla in this downtrend for the past, I don't know, just before 2024. You came up, we came down, we came up, we came down, and we played both ways right here. Top of the trend, bottom of the trend, top of the trend, bottom trend. It's like clockwork. Now we're hugging the bottom of this trend. So it's like, okay, well, now the information I'm used to having, this technical analysis, it's kind of limiting me because, well, I guess, we can look at this and say, all right, we're at the top of this trend. We can expect to come down here. I'll make that an arrow so it's a little clearer. And I'll make it orange. Try to make it orange. We can expect it, okay, either we're going to come down this trend or we're going to pop up and go to the top of this trend here. We are at an actionable inflection point, right? Or a decisive, a watershed moment in the past, how long has it been going? Almost like just over a month, right? We've been trading sideways on Tesla just over a month. If we break this previous low, which is, what does that say? 167.70. If we break below that, we can expect a trip down to where? That pattern we were just talking about, the bottom of the symmetrical pattern. Of course, it can break through that, but right now this looks like a goal. We have a gap right here, and we have a little fidgeting around at the bottom of that trend, but this seems feasible. This would make sense. If that happened, if we look back on it, it would say, okay, that was not something crazy. That's not something out of the ordinary. That makes sense. So that now that we have that, we can then look into more information because now we're at a standstill. We're like, okay, well, I have all these levels. I have all what I know that I trade with. How do I add to that? A good answer to that question is QTA. QTA works with quantitative method, which is cold, hard math. And you hear me say that often, cold, hard math, because that's what it is. With me and these the levels and the trends and everything, this is a science, but it's also an art, right? My trends might not match someone else's, and a trend that I write today could be completely different on the next day and the next day. That's why I think my best trades are on Mondays, because I'll close out on something on Friday, have an idea in my head. Throughout the weekend, I'll pop in, I'll look at it, I'll glance at it on a Saturday, be like, oh, you know what? I like that idea that I had, but you know what? Maybe that this is possible. Okay, and then Sunday I'll look at it again, and then Monday it's the best information that I have to use. So I'm gathering what I have to use, and I'm applying it to the best of my ability at that time. So we can add to that data by incorporating quant trading and the GEX levels. And by quant, I'm going to show you this. This is the quant charts. This is like the foundation of what QTA was. These charts. This is something that Brian created as an avid trader and a coder. He was able to develop this to save himself some time in the morning rather than poring over the different calculations and levels. He developed a program that does it for him. And now he's able to focus his energies elsewhere. And that's the whole idea, right? To get good at something so much that you don't have to spend an enormous amount of time on something to get the end goal that you want. So when I first started using QTA, I was trading off of just this. Well, mainly this, right? I would say, okay, and we always, and I say we joke around, but it's less than a joke now, because if you were to show this to someone like your 12-year-old niece or nephew, and you say, you know what, I want you, like a game, like I want you to think of this bouncing ball, the price action, as a game, and these levels are going to be the barriers or, you know, the deciding factors. When you reach a level, one of two things can happen. Either you bounce off of that level or you break it and you go down to the next one. So when you see a break, you want to see a break, a retest before, and then that would be confirmation to travel down. If you break a level, it comes back and retests it, and that retest fails, then that level is not what you thought it would be, and that continuation is kaputs. It's no longer feasible level. So that the idea is either you bounce or you break it. How that plays at that level is how you trade it. So for right now, just looking at this, we have a bounce here on Tesla, and now we have a double bounce. When we bounced the first time, we went up to the VWAP. This skinny line is the VWAP. Up to the VWAP, it got respected. It bounced right back down to this level, level to level, level to level, right? Come down, we bounce back up to the level. Come down, we bounce again. And on that second bounce, we have a nice ride up. Now, this is the break and retest level. We have a sort of a break, a little bit of a battle, but once we broke it, we retested it, and it proved to us that it's respecting the VWAP on the north side. Now we start going up. Now we're in this second touch on the VWAP on the north side, the opposite side of where we were. Based on this, just this information alone, I would expect Tesla to now go up to the next level, level to level. This other level here is the intraday level. Every day you'll get 2 intraday levels. This is going to be the range for the day. Right off the bat in the morning, Tesla broke it. I think it had something to do with Elon saying something about how he doesn't want Apple to use AI, and then so he's not allowing any of it. He would have his employees not use Apple products if they wanted to stay employed, or something extremely Elon of him. And that's the problem with Tesla, or that's the fun of Tesla, that there's such a weight hinged on a catalyst of a debatable genius of our time that is he's very involved with communicating to the public, and we love it, right? We absolutely love it. And that's why Tesla is so enamored by retail traders and institutions alike. So getting back to my point, this intraday level updates every day. This is the 2-day VWAP, same idea as the regular VWAP, but it uses 2 sessions worth of data. It's anchored to the previous day. So it's a little more smoother. And it's, in my book, or in my understanding of it, it's more respected, right? So you can look at it yesterday. We touch. We kind of drift away. When we come back again, we get a pseudo touch. And in the morning today, it was maybe another attempt at it, rejected, and then straight down from it. Based on that information, when we revisit this 2-day VWAP, we should expect some type of hesitation or some type of, decisions to be made there, right? Keep that in mind. If you're on the south side of the 2-day VWAP, you tend to want to stay on the south side. If you're on the north side, you want to stay on the north side. When I first joined, and Brian brought this to me and addressed it to me, and we were talking about it, I spent a weekend going over everything that was QTA. And the beautiful thing about QTA and what's Brian's to set up was that there's everything is like 90% of everything on here is archived. So you can back test anything you want. And we're going to back test today because last week in this workshop, we talked about Tesla's future. And guess what? We are now in Tesla's future. So we can look back at what we said and what we determined might happen and what did happen. So let's do that now. What did we say last week? We talked about the GEX last week. And the GEX is gamma exposure. You can look that up in the definition. It'll say something like the amount of energy moved to 1 point of the underlying. We just want to know how to trade it, right? We want to know how it affects our trading. So here inside the Discord, when you're a member on the gold side, you'll have access to the gamma exposure tabs, these channels. They have the Qs, the SPX, the SPYs, the Russell, and the 0 DTEs, which is the the same day expirations. And we also have the top 7, right? The Tesla, Apple, Amazon, Microsoft, NVIDIA, and Meta and Google now added. Thank you, Bartman, new member, gave a suggestion. Bryant liked it, applied it. Keep it moving, right? That's the way we go. If it in one of the greatest phrases I remember Brian saying when I first linked up with him was that if it's good for traders, it's good for QTA, right? Case in point, if you spend any time in the Discord, you spend some time in the gold chat, it's everybody's personal ideas, and you'll see people sharing their own their own spreadsheets, their own databases, and their own ideas and things, and where they expect things to go or what they're looking at, and we use it together, right? We kind of form an idea that's good for the bunch, but we don't want to have what we don't want is a guru where someone is just following. Hey, what's up? It's 9:45. What's the trade for the day? Where am I going to place my money? We don't want that. What we want is someone to understand how to use the tools and apply it to them going forward. Edgelow's in the house. Love it. So getting back to what we're doing, if in the Discord throughout the day, you can click on any one of these, and these are a feed of the gamma exposure. We call it GEX. Everyone calls it GEX. It's not just we. It's not a term that we just use. But last week, we talked about how to use the GEX, and today we're going to touch on the advanced GEX. But before we get into that, let's just break down what gamma exposure is and how to read it. We open up this chart here, and if this is going to be too big, I think it is. Yes, too big. So this is a gamma exposure feed. This is a GEX feed. Every 15 minutes, or on Tesla, it's every 16 minutes, you'll get a snapshot of what the current GEX environment looks like. You'll have these bars. These are right now, these are navy blue. This is negative GEX on the bottom, positive GEX on the top. When these negative GEX, when they turn red, that means the net GEX is net negative. And all that really means is a more volatile trading environment. So right now it's kind of cooled off, right? We made that big move in the morning, and Tesla's kind of hovering right here at this 170. Why 170, right? Why was it 170? Why did we just pick out of nowhere why to stop there? If we look on our chart, we can see, I'll do a 4-hour, make it a little easier. There you go. A 4-hour chart. We could see this one little outlying dip on Tesla when it crashed. Now, I think this was after earnings, right? Where earnings was around there. So in the beginning of May, right, we came down a little bit, kind of found a footing, but then we slipped. We found a new footing. We look back right there, and this kind of validates that it was a resistance on the top. Once it broke, what did it do? It broke, came back, retested it, it held, and went soaring up after that. When we revisited it, it held again. So this break and retest proved to us, it showed us that this is a strong level. And I made it red for those intents and purposes. After it flew back up, it came back down again and tested it, and again it flew back up. So this is a very strong level. This is 167.44. Moving forward, and I think that was like after hours or something. So maybe even like 160. We'll leave it here just for now. But let's move forward to this point in time and see where we came down to. Again, look at that. It was almost like a goal. It was like coming off an airplane and running to your significant other that's waiting to pick you up, right? You ran into it and you hugged them and then went away. So to revisit that again and held now tells us that, again, this level is strong. This is coming from technical analysis. This is what we can glean from our experience that we already had with it. When we couple that with the GEX, we can see that the 167 is no longer there, right? But the 165 is still hot, but this 170 is becoming the area of calls and puts together of a strike. This is an overlap of information. This is an important level now, 170. We were below it this morning, so it's going to be interesting if once we break it to have that break and retest to go higher. I'm kind of zoning in on what's happening right now, but we were supposed to be looking back on Tesla. So stopping at there and doing that 167, 170. What was last week? June 4th, right? Was our last when we talked about it. So again, great thing about QTA, Bryant T archives, I guess 90% of all information. So we can go back and test it. So when you first join, you can look back at what last week to see if this would have helped you in your trading information. This is the 6th. Let's go back even further. One more day. June 4th. So this is what we had up when we talked about it last. And I think I said something like I'd be upset. I'd be upset if Tesla did not run down and hit 170. Right. And I said something like it doesn't have to. This is not a trading signal, but I would be upset if Tesla did not go down to 170. And we did. We did today. We went down and plus a little more to that 167. But let's look back. And now that we can look back in hindsight, now that we know what happens, we can see, why did we discuss that last week? Well, we were here last week. We were right in the middle. Max Pain was at 177.5. Max Pain is an area. Well, actually, the definition of it is the strike where calls and puts have the least amount of intrinsic value. A misunderstanding of Max Pain is that market makers want everybody to lose their money, and this is where the market makers are super happy. They're throwing parties because everyone's broke and they're happy and they're rich and they're just tooling around in their basement for like Gears and Steam and evil laughs. But in reality, market makers give us this super liquid market that we're so loving. That's why the New York Stock Exchange, the Amex, and the Nasdaq is traded all around the world. Is because it's so liquid and it's so. What does liquidity mean? Meaning, if we wanted to get, we look at the option chain and we wanted to get 1,000 put contracts on Tesla for just something crazy like 130 strike price. We want to get, so there's already 3,000 there. Let's take it 10,000. We want to get that. No one would be on the other end. So we have this like vision in our heads that if we want to buy one contract, we buy a contract. Someone on the other end is selling that to us. And we are in this contract back and forth. Me and John Smith, we have a contract. He's on one side of it. I'm on the other. And that's it. In reality, though, there's a market maker in between that. So when we want to get those 10,000 contracts of a 130 strike put on Tesla, the market makers are the ones that pick up the phone. They'll take on that order. They're not going to give us the price we ultimately want, but this is the way, the markets work. We'll be able to get it, but not at the price we want. If we got the price we want, it would be unbalanced. So they're there to keep it balanced. They'll take that order on and leave it on the books as open interest. And then they will fill the other end of that contract with people who are interested in selling it to eventually get it off of their books and create it to make it a real thing. In between that time, as open interest, the market makers have to hedge. And they have other ways to hedge. Usually if we had that 10,000 contracts calls, they might buy shares to off-put those calls. So that's a whole nother video to get into, but this is how you can understand how market makers want price action to go certain areas to kind of keep the market liquid. Let's dial it back down and get into, all right, Doc, that's fine. That's great. How do I trade it? Okay, so here, this is how do we trade it. So Max Pain, thinking of it not as something, a goal for the market makers so that everyone loses money, but more of just the definition of it. The definition, again, being the strike where calls and puts have the least amount of intrinsic value. And if you want a visualization of it, you can go to a site called Maximum Pain. Here, you can see it live, and you can kind of understand where I'm going to go next with it. The way I use Max Pain is it's like a hard or a strong, I should say, strong support and resistance, right? And you'll hear me sometimes say, "Oh, this is going to be support." Well, don't you mean resistance? Because we're on it. Yeah, sure, that's fine. Support and resistance are the same thing. It just matters what side is the price action you're on. That's all really. That's the only difference that there is. So when this loads, and this is my fault. It's the bandwidth that I'm using. So I have a couple other people on this Wi-Fi, so this is not indicative of the site or QTA. So here, this is visualization of calls and puts. All these calls on one side, all the puts on the other. Max pain is the spot where it has the least amount of intrinsic value. This right around in this area would be somewhere in max pain, and they have it at literally 177.50. That's the exact point, and that's right here. It makes sense. So if you understand max pain as a support and resistance, you can probably get a little more functionality out of that level rather than think of it as just as a goal. If you're looking for a goal of price action, look no further than this other value. This is the absolute GEX, right? Absolute GEX is the area of high liquidity. And to better visualize, get a better visualization on that, that gets us into advanced GEX, which was the goal of what to talk about today. I only got there a half an hour into this video, finally getting to the goal I want to talk about. But I take this opportunity to be in front of you guys, and I really do try to get as much information I can. I probably should just do something more on the regular, right? That makes a lot of more sense, but it is what it is, and we're probably going to do that. So advanced GEX, right? Now that we kind of have a visualization of what GEX is and how you use it, well, not really, but we'll get into that more. Just the absolute GEX, it is a value on that chart, but it is a value of more, let's give it like this. It's more of a changing value than you might think. Max pain is a static thing. It's going to be the, until the calls and puts change, this value is going to stay the same until less puts, come out, or they close these out, more calls. That's what changes. Otherwise, it's something static that stays the same. With absolute GEX, it's a fluctuating value. So here we have the GEX, and just real fast, the negative GEX, when it's red, that means the overall environment is net negative, which means higher volatility. That's the only difference between the red and the navy blue. That's the number one question that people ask when they first start using it with me. So if we turn this on, the absolute GEX, we shut this off, we then see that they have their own values. Now, absolute GEX is a higher level thinking than I care to even know about. This is why I love working with Bryant. He might be able to tell you the exact calculations on what this means. For me, I just need from what it does for me. And what it does for me is tell me where the high liquidity is. Right now, we're right at the spot price where we are, 170. We're at spot at 169.65. We can actually just take a quick look, and we have these secondary levels that are really closing in fast. And then you can look at tertiary, one below, one above, and it just kind of trails off from here. This is a really centralized graph, centralized around the current spot price. What we want to look for is when we are out of pocket, when we were out of liquidity pocket. If the spot price was down here at 155, this looks like a nice road. I would post in the room, hey, there's a nice road paved to absolute GEX at 170. Now, we don't want to trade on just one value, right? So then we'll look at, of course, the GEX tabs, and these GEX bars, they tell us where high levels of liquidity are. So the higher the bar, the more of an attractant it is, right? And people will tell you that they trade with this. They trade using net GEX just for volatility alone. They just look at this for volatility. I use this as more of a strike price goal or a strike price target. Basically, what I'm looking at is sentiment, right? This is sentiment that I'm looking at. I can highlight the call volume and the put volume, the open interest, and get more of an idea here. This is the call volume. Right now, it looks to me as like, okay, it would make sense to go up. We'll meet this high GEX area right here, 185. We have this call volume spike, which acts more like a roadblock or a support and resistance. So if we were to travel to this 185, I would expect this would be my exit point. Somewhere along this line of 185 would be an exit point for me. I'm ignoring this, by the way. I'm just trying to dial in and see actually how to trade with call volume alone. right? This is not an actionable trade I'm discussing right now. I just want to make that clear. But based on this information, this was the only information I had, and these negative GECs were not here, I would expect this is a nice path. Okay, a nice little journey upwards to 185, and I'd be out somewhere along the way, collect my profits, and have a nice weekend. But that's not all we have. We have other information. But I'm just saying, call volume acts like a bit of a magnet, but more so like a support and resistance. If we put in the call open interest, I use that as a magnet. And we'll go on down here. 200. Yeah, this is a little, Tesla is a little, I guess, a little difficult to use as an example because it's so it's so, there's so much retail traders and independent traders. They're getting in, they're getting out. They're not holding their positions long enough like institutions usually do. So you get these values of 200. 200 has been a goal, whether we were above it or below it, for like the last year and a half, or at least 6 quarters, right? But the same idea holds true, that this is an area of interest because it's high sentiment. Remember going back to those contracts that we bought, right? Those 10,000 contracts for Tesla at 135, or was it 130? The puts, 130. There was 3,000 of them already there. This is telling us that sentiment. This is an interest of that level. There's someone that, or some things, or a bunch of things that has an interest at 130 for puts for Tesla. We can read sentiment by looking at these GEX charts. We can also read where the high liquidity levels are. And we couple them together, we get a little bit of a picture. I always have to shut off the absolute GEX when looking at all the other values, because the absolute GEX just completely covers. It just completely supersedes all the other levels. So just remember that, and that's the greatest thing about it too. It's everything, you just toggle data to no end. So now let's look at the other side. Put open interest. These are goals, or these are targets, I should say. That's just the way I look at it. That's the way I understand it. The targets for the price action. That would be a good target to come down. This is a little more like blobby, and they're not really, they don't really jump out at me so much. But this one does. This one at 155, that one does. And it's a nice little road up here. But we're at this like spike right here. So then we have to put in some other. Where's the put volume? Is that going to be a little bit of a support and resistance? Right now we're at the highest put volume. This is a strong support in my area, in my head. If we broke this area, we broke down, we're now looking into here, this now becomes resistance on the other end of it. Just a little way how I break down looking at all this data. You may use this, find completely different way to do it, and you'll post about it in chat, and I'll be excited, and I'll be talking about the way you use it, a week from now or a month from now. So what we do is we overlay all this data, and then we come up with a trade plan. Getting back to the GEX that's on here, I can click on it. We have a lot of negative GEX that's of interest down here. So that initial, nice little journey up to 185 is not looking so tantalizing, so juicy anymore, because now keep in mind, I have 2 weeks of expirations on here, and this is looking, okay, Tesla might have some more work to go down. Now we're coming up with this idea. Now let's stick with this for a little bit. Okay, let's say 155, right? It looks like a nice little journey. And as we start traveling down, you might see these GEX bars increase where the sentiment increases. And that would be paving a road. That's the literal definition of what I think about when I say paving a road in chat. That road could be paved as this GEX gets higher and higher. If this starts to dwindle down and this put volume holds as support, this is more viable. Let's stick with one theory at a time, saying that, okay, let's say, does this make sense? Does this road to 155 make sense on a technical standpoint? What we can do is look back on our technical chart and overlay that onto it. Sure enough, 147 is the bottom of the gap. So 150 kind of works, and actually 152 would be covering another gap here. And then you start folding in, like making a some type of baking recipe, whatever. You start folding in other ingredients. Like, yeah, this looks very doable here, that this open space, you have this big bar, which acts like a slide right down to 158. But this 150 makes a little sense. That journey that we talked about when looking at the GEX by itself makes sense on the chart. So now we have confluence of data. We have one data point, which is the technical analysis saying, hey, you know what? A trip down to like 147 or 145 even kind of makes sense. We pull up the GEX chart and you say, okay, maybe if we throw another week on here. So let's break down. What am I looking at over here? These are the expirations for Tesla. Every expiration on the options chain for Tesla is here. So when we come on to advanced GEX, we can create our very own individualized report, our own GEX report. So let's say we want to go throughout the month of June. We'll highlight every expiration that's in there. We'll click submit. And now we have our very own tailored GEX report, right? This is all the expirations that are left in June. And now look here, we have this 160. That's a higher bar. What I like to do also is take away this one because this is going to have the most volume in it. That's where retailer trades hang out. They trade in the closest expiration is like the hottest point. If we remove this data, which can be swayed by other independent investors, we have a little more clear of a picture. This 160 looks pretty sweet, right? That's the highest GEX, and that's where we're going. Now, if we turn on the absolute GEX, let's say before we turn it on, if we turn on the absolute GEX and it spikes right around here, that would be a confluence of data. We have the highest GEX bar and we have the highest area of liquidity, which is the absolute GEX. If we use the put open interest, and that is also spiked around this area, we then have triple confluence, right? We'll have 3 instances of data saying there's something important about 160. If the absolute GEX is down even further, then that's still good for our theory that Tesla's going to have more digging to do because it's still an attractant toward that area. The put volume would act as a support or resistance. Let's put that one on first and see where that lands. Okay, right down here, 155. This is saying, okay, so far your theory is holding up. That Tesla, if Tesla were to move down this direction, it would make sense. There's puts down here that would be satisfied, and there's spikes which can act as support. So right now, this 160 is looking pretty good. Let's shut this off, and we'll go to put open interest and see where that lies. Boom, right there, 160, and even lower, 150. So if this does travel down to 160, it's not the end of the road because there's still open interest even lower at 150. All right, now here's the real killer, or the real the real party. We're going to click on the absolute GEX and see what's going on there. Absolute GEX is highest where it is right now, which makes total sense because we just traveled there, right? We just traveled there up from 177.50 as of yesterday, and now we're down at 170. I'm going to check back in tomorrow, and this absolute GEX would change. And remember, this is a few weeks out. So this is going to take time for change because these people that are invested 2-3 weeks out, they're not so fast to change up their trading plan. Right now, they're considering maybe taking profit, or they're considering leaving in whatever they have. What I'm trying to say is that this may change over time because we just had a major move. But look what's at our 170. I mean, our 160. It's a clear spike of absolute GEX. These are still higher, or you can argue saying there's one, but this is a tertiary high. Anyway, this is a spike. This is 160. This is of interest to me. So this 160 is looking pretty good. It actually confirms our theory, not 100%. I don't think anything will be 100% in trading, but that's all we're trying to do. We're trying to get an edge to find out where a more confident move is. So based on this alone, I would have no issues of at least putting like a little bit of a, just like a lotto, or saying, you know what, if I covered this in class and I spoke 30 minutes of it and I didn't involve myself in it, I might kick myself in it. But if we're looking at just the volumes, we have this a little bit of a drawdown of 160. Obviously, that 200, what I mentioned earlier, that's always going to be a draw. I'm telling you, when you see Tesla get to 220, 200 is still going to be of interest. I'll tell you that right now. We'll revisit it when Tesla does get up to 225 another time, and you'll see. But this is almost like, I know there's nothing to focus your energy about. But this area is still looking pretty hot to me, at least, And again, this is all my personal opinion on it. This is the way I trade using the GEX. You may have different ways of doing it, but this is exactly what I do. So now we have that instilled with those 2 weeks out. We're going to uncheck all and get back down to the present time. Where are we now? So we have this idea that Tesla has some more digging to do, but we just had this major drop, right? Does it make sense for Tesla to just keep dropping, or does it need a little bit of a bounce, a little bit of a breather? Sure, it did bounce the last time. We just got over spending 15 minutes of how important and how strong this level is. So if this level doesn't break this week, it's not to say that that plan is just off the table. It's just in the works, I guess you'd say. So we had this nice bounce off of here. What would happen, though, is if this level that it's been support for so long, as it's retesting that, look how long this has been support. It's crazy, right? So here's an actual, this is perfect what we're talking about. We have a break of a level. It came back to retest it. That retest didn't hold and it flew up and it came back and tested it on the other end. So this is important while you wait for a retest on any level break. If I turn off the extended hours, it looks even a little more clear. Now it went back too far. Right here. We have a break of it, and when it retested it, it failed, and we stayed above it. So you can play the break for sure, but just don't expect a retest to hold. So here we are again. We broke that level. We're coming back to retest it. I kind of have a feeling, and again, this is where gut and instinct kind of cloud the data. Now, what I talk about when I say I kind of have a feeling that this is holds, that's just pure gut. That's not a tradable, actionable level. But if this does hold that level, I'd be more on board for Tesla going lower, right? Does that make sense? And you play level to level. I'm not going to make a decision now, even though we just discussed a theory of Tesla going down for the last 20 minutes. I'm not going to make a decision now, right? We're going to wait to see what happens at a level. You make decisions at levels. You don't make decisions in between it unless you're playing to that level. If I was making a trade for this week, let's say, I could safely assume that either this level is going to be touched again or this level. Based on what happens tomorrow, we might just touch it overnight and come back down to it. So making a move right now while you're in between actionable levels is I guess I'll say it's a common mistake that people might make, because we can get on board that trade that we just talked about. And as Tesla moves up to 172, we will feel defeated. We will feel, okay, we were wrong. It's not going down. Let's get out. Then after this level proves strong as resistance, it starts traveling down and like, oh my God, I knew it. I always should trust my gut. It's not a battle of trusting or not trusting your gut. It should just be a reflection on where we make our entries. Circling back to where I just put in this week instead of the other 2 weeks, now I'm looking for an entry into that trade, a swing trade, right? A swing trade is just anything that you hold over more than one day. You can do a swing trade for a few days, a few weeks, or a few months, right? Looking for an entry. Where would our entry be right now? Technically, it would be if it touches this level or if it breaks and retests this level. So if we had talked about this trade Friday, we would have said this level is an actionable level to trade. A break and retest of this level would give more of a case to the trade down to 150 or 155, 160. I'm sorry, I forgot the number we talked about already. You see what I'm saying? So we trade at the levels and we try not to in between. What we do is when you get a little more advanced into it, is we want to scale into a trade. So if we're at this level right now, to scale in, we could start building a position slowly. As it comes up to this level, we can actually, no, I would wait till you build a position after you hit a level, but you build it as the price is moving in your direction. If we bounce off this level, we start playing down to 160, but this level proves to be strong, we can just get out and we collect a small profit. We don't have to wait for that level to get into it. Does that make sense? I have a whole other lesson on that purely focuses on scaling in and out. And it really changes the way people invest, because there's the common thing people come to me, and I teach one-on-ones, and it's people that have been trading for 20 years. It's people that have been trading for 20 minutes. But the people that have been trading for a while and they say, oh, I don't know what it is. I seem to get out too early. I seem to get in too late, or I get in too early and then I get out. And then the move that I expected to happen happens after I get out. Why does this keep happening to me? I'm the most unluckiest person in the market. Whatever I do, it always does the opposite. It's the fact that you have the right idea, but you're applying it in a slightly off tone, right? And by scaling in, you satisfy that. So we scaled in, approaching this level of action, we're already in it at a discount if we do decide to get in after it. So if we got in 20% up to this level, it breaks, and then we get in another 80% after retest, that's okay, because now we have 20% of that on a discount. Again, I'm getting off on a tangent. That is something to, I would happy to have any one of you guys as a lesson for that. But how do we find the exit, the entry here at it? This is a pretty high liquidity area. I would literally wait until something happens after this level right here, 165. If we had satisfy that, we might see this increase. But we always want to have our eyes to the future. That's what investing is. It's not of right now, what's going to happen in the next 5-10 minutes. It's what's going to happen down the road. And then people will say the market is 3 months forward or 6 months looking forward, as opposed to the economy. Because all of us in this room right now we're in tune with the markets. We're in tune with how the markets are doing. The market's doing amazing. But when we hear friends and family saying, oh my God, this economy's in the toilet. I just paid, $6 for a gallon of milk. This is terrible. But for us, we can understand why that's happening just simply because there's more money in the world to go around. When there's more of something, it becomes less value, right? Gold is very valuable because it's so rare, right? If gold was pouring out of our faucets, it wouldn't be so special, right? So when there's more money of something, it's worth a little less. Everyone has more of something. They want more money for their services, and it goes on. Sorry, did not mean to do an economics 102 class here, but that's the idea that we're forward thinking. So when we're forward thinking, we want to maybe look at the present for an entry, but we have to look to the future for our exit and where it's going. So the advanced GEX is a powerful tool I use during swing trading to find areas of liquidity, to find areas of interest, to find sentiment, to find targets. We can find levels very easily by using our technical analysis. And within those levels, we can find sentiment and find targets for that price action. So we have the level of 165. Is there sentiment there? Well, the GEX tells us, yes, there is. There's actually a high sentiment of 165. So now a trip breaking this down to this goal level of this yellow dotted line, that makes perfect sense. And if we were to trade specifically on this one weekly expiration, we'd be handcuffed to just the closest expiration. With advanced GEX, we don't have that. We can go further out. We can go to the next monthly OPEX, and we can find out what the sentiment is for the next month and trade accordingly there. So initially, a lot of people think of QTA as a tool to help with day trading. And it is, by far, it is one of the greatest tools that I've come across. And I can say that the validation of that is that I'm so super involved with this after a year of being introduced to it. But what is not fully grasped when you first hear about it or join is that it's very, very good for swing trading and finding where the sentiment is of the future of the markets. And if you're into the spreads and option spreads and creating butterfly spreads, that's Brian's wheelhouse. And we're almost like it's an entirely different type of thinking when applying all the tools that are with GEX. And you can see here in the option spreads channel that people are sharing their spreads. It's broken butterfly wings, iron butterflies, and things are huge in this. And I'm not going to talk about it too much, but the trade engine is something awesome. It's still in the beta version right now, but when this gets going, it's still in the learning phase, just like anyone first joining QTA. It's still learning, it's applying, it's what's been taught to it, applying to the markets and showing it. So you can pop in here and you can get an alert, for a morning fly if the conditions are right, apply it and see what happens, and it gives you the outcome of it there. And again, I'm not going to spend more time than that on it because it is still in beta, and when it is complete, I fully confident that it's going to be a game changer. And that's the only 2 words I've used of it recently. So if you're into options and butterflies and condors, get ready. That's going to be a lot of exciting things to come. So I would love to go on and yabber on about how much I love advanced GEX and how much I use this for day trading too, because it gives me more data than the GEX does. But on a quick note, you can pop in and use the GEX feed as an idea. And also what's good about the GEX feed is it's a running tally. It's a tail of the tape. So if we're just jumping in now at 3:30 in the afternoon, I haven't looked at the market all day. I'm like, oh, we came down to this 167. Was that a target? Did we reach our target for the day? Or, what? So we could just circle back to the beginning of the morning and see. We'll see it in 10 o'clock. Yeah, 165. That was the draw. And we were below this put spike. That to me would have been a bit of a resistance. And this would have been a nice target down. But now look at all this goodness above it. And let's get back to the present. Right? We're here now at 170. We have this put spike there. The call spike, we're above it. This to me acts like a bit of a resistance. Any further down for that trade we were talking about, we would have to break this level and then revisit it at 165. 165, that's our level right here. This would be the level of action further down. Right now, this is the level of interaction. So it all circles back to level by level. And you'll see me post that all the time. And if you guys that are you're in enthusiast chat or you're in public chat, I post setups and things that I see that we just talked about, and I'll post it in here and I'll say all the time, level by level. Let me see. Where's the most recent one I said? These are all just charts that I found in theories, right? This was SPY reaching the bottom of its trend and that possibly going higher than 522. And what's the SPY at now? SPY's at 535, right? So, I mean, it's I don't want to get into like a tale of like what was said and what wasn't. I don't think that was even, sorry, I'm getting a little flustered because I'm just really excited when I start talking about it. And that's why I try to have to put my time. I keep looking over at it. So I think I've set it up enough for anyone that's into swing trading can understand how I use these tools for swing trading. When we try to dial in and find the entries and exits, it does work a lot on how to trade around a level. And a good way to look at it is on the beginning of the day. When I worked for under someone, and he would draw a box every day, and that would be the ranges of the day. He used those boxes from the overnight levels. The overnight levels created a range, right? He had the top range would be here, the bottom range would be here. Well, what if there's no overnight levels? What if, how do you trade this? How does that going to create a box for your day, right? When we look at the GEX and we look at the sentiment that's there, my mouse is just clicking on like, there we go. When we look at the sentiment, again, opening it up at 932, we have this sentiment up here. We have the absolute GEX, high liquidity, right? High GEX, high liquidity, high confluence level. But what's in between that? What's stopping us from getting there? We have this call spike right here. We have this call spike acting as a resistance. For me, this would not have been an actionable trade until this level was broken, right? Level by level. Do not trade for this until this proves to be support instead of resistance. We fast forward to the next one. The next one is 16 minutes later, and the price has just gone away from that. That support, that resistance held, and now we're trucking down to this negative GEX here. Again, so you don't want to trade specifically using one data point. For so long, I was trading just using technical analysis. And I have this conversation with Bryant all the time. It's like, we've been to the similar seminars from these hedge funds in New York City and Manhattan. We've been to these classes. I've followed everything. I've followed the indicators, the trends, the patterns, everything that we've been taught is now not secondary, but now it's being overshadowed, if you want to say it, or anything, by this new information. He refers to as using X-ray specs. I refer to as like the hidden market levels. And that's exactly what it is. These are hidden levels that we're not seeing. We had no information. We had no range from the overnight, But in the morning, it gave us a range. It gave us the high range and it gave us the low range. Our box was bigger. All right, that's the wrong one. Our box was bigger than the range of overnight it gave us, 165 to 185. So now that we're at the bottom of that box, where do we go? It could make sense that we try to go back up, but the box has now changed. We're now in a new box. We're now below this. So this is the next level that we're going to be watching to hold as resistance. If it does, you can do a nice trade down here, down to 167. Again, this is not financial advice. This is not telling you what to do. This is just what could happen and could be possible and what I'll be looking at. If this level breaks, I'll be trading down to here. And if you want to get a little more forward thinking, you look more forward, right? We pull on the day and we say, okay, this looks like an actual level. Now, circling back to the beginning of this conversation, we have this level here. And if we were to revisit this, depending on what time, it could be around the 150 mark, right? This is like 140 if we come sooner and 148, say, a little later. So if you want to look forward thinking, you go further out in time and you play a little lower. The closer you are to playing, the closer levels you need to play with. So right now, this is the closest level. We are still looking at this level for that 150 or 148 trade as an entry point. You see what I'm saying? So I know I covered a lot, and I'm kind of I'm starting to fly all around, and this is leading me to I'm leaning towards doing more of these just because I enjoyed so much and I love the feedback I'm getting it from it. So if there are any questions, oh, by the way, sorry, as a thank you for joining this workshop, if you're on the fence of joining, you can use the code DNOW30 in checkout, and that will give you 30% off your first month at QTA. Make sure you absolutely love it. And then when you do, you can reach out to me through DM and we can sit down and I can help you get acclimated. And if we do, I really want to get like a class of like 5 or 6 people at one time. We can do an onboarding session where we can walk all the way through. And to onboard is nothing. Brian has made it the most easiest process in the world. You just go to dashboard, you go down to getting started, and you follow the checklist there. And then once you're on, you can back check, back test, back check, whatever you want to do to your heart's content. The first thing I did was a Tesla trade on earnings around Easter, like 2022, to see how I did it. And it was interesting. So use the code DNOW30 to get 30% off your first month. Come find me in chat and we can get you acclimated and you can start trading more confidently, right? You don't want to have, and I see this and it makes my skin crawl. When someone says, oh, I just got 100 contracts, I hope Tesla goes down. I went, oh, no, we should not be hoping. There's no hope. If you're hoping, your risk is too high. If you're sweating, if you're going to sleep at night, like, oh my God, I really hope Tesla goes, that's too much risk. It's too much risk. We are not in the business to make money. We're in the business to save money, to grow money. Making money is an add-on to it. So we want to hold on to what we have, because if we're losing what we have, we're doing something wrong, and it's the exact opposite of what we came here for. So our goal is to save money. Once we have that checked in, that directive planted in our brain, then we can move on to the next one. So in order to save money, we don't go all in and get 100 contracts to Tesla 150. We start scaling in. We wait for our entry point, nice and calm. We start scaling in maybe the 10 contracts to that 100 contract order, and then maybe 10 more. And then we break this level, we retest, get 40 more. You know what I mean? We scale into it. So this way we're always in the active process of making money, and we don't make money until we sell, until we close something. So in this process, we're always taking money off the table. Right? As we build our position, we start immediately switching gears to taking money off. We scale in, we scale out. It's like an annuity. I sell annuities on the for my insurance business. So an annuity has an acclimation phase and a distribution phase. You put money in and then you take money out. There should be no time where you're not actively trying to build a position or actively thinking of closing a position. Right? The buy and hold is different. When you're buying shares, you hold it. That's an investment. That's different. But when you're talking about options, options revolve around time and price action. You should always be thinking of what you're doing next on it. Leaving it is not a good strategy. You'll see even in the option spreads channel, when Brian posts his spreads, he'll post things of maintenance, right? Okay, the price action went this way, so I added a little credit call spread on this way to counteract that. He's actively maintaining his trade with directional calls and puts. There's no maintenance. There is no other leg to add. There's no anything. So what we have to do is either actively build, slowly scale into a process and then slowly come out of it. And I'll post all the time in chat. I'll say, this is a profit level. Consider taking profit here. Consider taking profit here. I'll say consider taking profit when I'm really meaning is, oh my God, close your positions. You know what I mean? So I got a little excited. I apologize for that, but excitement is good. Excitement is good because I'm always ready to help someone else learn. So that leads me to my next thing. If you're interested in a one-on-one about learning about options, about how to trade with options, reach out to me. It's either doc@101stocks.com or you can reach out to me here. Wrap that up real quick. Keep in mind, join it tonight and take this week and then come in next week and we'll have workshops for everyone that just joined. Use the code DNOW30. It'll get you 30% off your first month. You reach out to me and we'll set something up to get you started. And I think I'm going to do this more often. This was a lot of fun. And I really want to thank you guys. So that's really all I have. I think next week we're going to focus on, I'm not even going to say the topic. I'm not even going to say it. I'm going to leave it open to see what people come up with. So if you're on the fence, consider taking that code and just do something right. Because I know I've dropped a lot more than what is it going to be? $140 with the code. I dropped a lot more than $140 on a lotto. Let me see. I'll see if that works. This is going to be $140 for you to try out tools that will help you with all your trades going forward. You know what I mean? And I know when I first joined, I was like, man, if I had only started sooner, I would have saved a lot more time and not even like money wise, but stress. It's been the least amount of stress in the past year trading with QTA. And I'll say it again, it makes good traders great and great traders more confident. And I really can't say more about it. The confidence this creates is amazing because if we started traveling down this way and we saw the GEX shifting, especially the absolute GEX, that would be alerting to me like, maybe that 160 is not all it's cracked up to be. Let me start scaling out. It will save you stress. It creates, it's like driving. It's like sailing from Italy to New York and saying, I just need a map. I don't need a compass. I don't need, what are those, the sextets, whatever to find the horizon. I don't need any of that. I'm just going to hope that I land somewhere in New York or in America would be, good. And I'll just take a taxi to wherever I need to go. That's bull stuff. You need the tools to give you the confidence for your trades. And keep in mind, it's day trading. It's not everyday trading. You don't have to trade every day. For Tesla, the past week and a half was mind numbing. It was just back and forth, back and forth, back and forth, back and forth. If we didn't touch this level on this day and we just came trading in straight, it'd be fine. It'd be okay. I'll just wait for another day. But for this to come up and test this resistance, that was an actionable day. That was an actionable trade. And we talked about it. I think it was a private video now that I'm thinking about it. It wasn't something public, so I apologize. But this was an actionable trade. We don't have to trade every day. And you'll learn this. The only way to learn it is to find the tools that make you more confident, like QTA does, at least for me. I can't say that it's going to do that for everyone, but everyone that I've spoke to and helped them along and got them to use it to their intentions of QTA has nothing but thanks and gratitude for sending it. So consider that. Find me. If you're not already in QTA, come find me. Use the code DNOW30. It'd be like $140 for your month, and you'll learn these tools. And if anything, you'll understand how to trade using GEX and quantitative methods better. Right? Angelo, thank you. These are gems and so dope to hear you passionate about what y'all do. Yeah, man. See, Angelo, I can't wait for you when you're aboard, man. You're going to be a positive asset to this community. Thank you guys so much for watching. Hit the like button, subscribe, and get notified when I do this again. And if you're still on the fence, recall the last time that you dropped $140 on a play and you were just kicking yourself because I can't believe it went there. Now imagine instead of that, you apply that loss to a subscription service that gives you the tools to help prevent losses and see where the market may be looking, right?
Now imagine yourself in the community trading alongside other people that use GEX and quantitative method. Right now, head on over to Quant Trading app, use the code DNOW30, get 30% off your first month, and I'll see you around the rooms. Take care.